Hi guys, let's talk about the closing price of a candlestick and its importance in this session. So the most important factor about a candlestick is its closing price. What this basically means is a candlestick is valuable information only after it has closed, not while it is still forming. A lot of beginner traders take a decision on the trade based on how the candlestick is forming on the live market while it is fluctuating, and oftentimes they also realize that the way it looks while being formed might be completely opposite to the way it actually forms. Let me explain what I mean. This is the 1 minute chart on Euro USD, and while the candlestick is forming, you can see that just a few seconds ago this was green in color, but right now it is red in color. Now it might again change by the time the candlestick closes, or it might stay the same. So what this means is we need to take a decision on the candlestick only after it has closed and not while it is forming, because the way the candlestick looks, the shape, the formation keeps changing as the price is still fluctuating, because the buying and selling is still happening. Alright, so first and foremost thing, a candlestick is of no use while it is forming, but as soon as the candlestick price has closed, then it can be used for technical analysis. Right now you can see this red candlestick just 1 minute back. When we started talking, it was green in color, but it closed as a bearish or a red candlestick. Again, the current one started as a bearish one, but now it is become green and looks like it would continue going up. Right, or it could also close as an indecision candlestick. So what this tells us is that all analysis needs to be done after the candlestick price has closed. Let's understand the different types of closing that we see on a candlestick. So there are basically two main aspects to the candlestick close. The first one is the body dominating candlestick, where you see the size of the body is always bigger or larger than the size of the spikes or the wick. And then we have the wick dominating candlestick, which simply means that you can see the bodies are much smaller compared to the size of the wick. So the wick is actually dominating the candlestick. Now what we see here is the Axis Bank 15-minute chart, and what we've done is we've marked a yellow line as a resistance for this recent swing high. Now if the market breaks up, this is specifically used for intraday, if the market goes and breaks out of this range, we can look at getting into a buy trade. What's important to note here is the candlestick which forms while the breakout happens. Alright, so let's go ahead and quickly take a look at how the breakout happens, because here we're trying to understand the importance of the kind of candlestick formed at the time of close. So if you see here, the candlestick which has broken out is actually a wick dominating candlestick, which means the size of the wick is much bigger compared to the size of the candlestick if you combine the complete wick size. So it's not a very strong breakout, right? So price is struggling at the same level for a bit before, although there was a gap down, but eventually price starts to fall. So that really was not a very good time to actually go long on the market, right? So that's what I mean by saying that the type of candlestick which forms at the time of the breakout is very important, so that you can understand how much importance to be put on the reliability of the setup. Another setup of the wick dominating breakout is what we're going to see here on the Escorts daily chart. Now you see we have again marked a resistance, and what we're doing is we are waiting for the breakout to happen. Now price is playing around there, and you can see that this particular candlestick, green candlestick, has actually closed above this range. Right, so this is a breakout, but again this is not a strong body dominating candlestick. It's a bullish candlestick for sure, but not a reliable breakout. And as you can see, the market did not sustain and actually started to fall. Right, so this really talks about how much importance to be put on the size of the wick and the size of the candlestick. Now let's take a look at the opposite, where the breakout is actually forming. using along with a body dominating candlestick. So we are going to go into the gold chart on the daily time frame, and we're not going into a replay mode. We are just going to check the breakout, which is done using a body dominating candlestick, right? So if you see, most of the breakouts here are a body dominating break. For example, you can see this recent move upwards, and if we go ahead and mark these ranges, you can see gold was in a triangle, right, a symmetrical one. Then there was a breakout of this here. You can see the size of the candlestick, you can see how small the wick is, right? This is a strong breakout, and you can see how the trend started moving up, although there was also a lot of consolidation here, but you can see the breakout was really strong, right? Again, if you see, price was in this channel here. You can see there is an upward channel, a parallel channel. Let me just draw it for you. Right, and if I do you can see there was a breakout here. Again, the candlestick is a body dominating candlestick with a small spike, and if I were to just extend this here, we can see price did a pullback, and now it is starting to move up again. So this is the whole point about the type of candlestick formed at the time of the breakout. Instead of just looking whether the candlestick is green in color and red in color, you have to give importance to whether it has a spike. If it has a spike, how big is the spike, what is the size of the body, and where it has formed. Alright, so that's it about candlestick closing. If you have any questions about this discussion, please feel free to write in the comments. And I'll see you guys very soon for the next video on the stock market analysis.